In this session then we're going to be taking a look at preparation of budgets, and before we launch into having a look at budget preparation we ought to just think about what the point is of a budget in the first place. A budget is quite nice and neatly defined as a financial or quantitative plan. So essentially what you do is you look at where you'd like your business to be heading and you put some figures to that, so you can quantify where you're hoping to get to. And there are a number of benefits to that. Not only is it forcing you to go through a planning process, which in itself can't be a bad thing to do, is it does provide a framework for control. So it provides you with something to compare actual performance against, and that again is useful for a business to make sure it's moving in the right direction. Secondly, a budget is a good way of allocating responsibility. So you give different people in the organisation responsibility to look after different parts of the budget. So it's quite a good way of delegating and formalising somebody's responsibilities. Thirdly, we've got integration. Now, integration here, we're really talking about by going through a budgeting process where different departments have to produce their own budgets that have to then be linked together. It's going to force them to talk to each other. So the coordination and communication aspects are also pretty valuable for an organisation. The fact that people have had responsibilities assigned based on the budgets means that it does provide a good benchmark for comparing their performance with. So from a motivational point of view, it can be good news, and from evaluating of actual performance can be quite a good and appropriate tool to use. So there's a whole host of reasons why budgets are considered to be a good and valuable process to go through, and why most organisations in the real world do have some sort of budgeting strategy and budgeting timetable during the year. Now if we just take a look at the CIMA's formal definition of a budget, pretty standard stuff really here, to be honest. It says it's a quantitative expression of a plan for a defined period of time. It doesn't have to be a year, but quite often a business will do a plan for its next financial year. It says it may include planned sales volumes and revenues, resource quantities, costs and expenses, assets, liabilities and cash flows. And that's what we're going to see over the next 2 or 3 pages. We're going to see all of those things being built into the sort of quantification of a budget. So let's now start thinking about, well, how do we go about preparing these budgets then? Because obviously in a short form exam like this paper, you're not going to be asked to prepare the whole of the company's budget. But what you might be asked to do is prepare one or more of the business's functional budgets. So by functional budgets we mean a budget for sales, or a budget for production, a budget for purchases, that sort of thing. And you need an awareness of what might go into preparation of a master budget. A master budget is just a term used to define the overall pulling together of your budgets into your financial statement. So your income statement, your balance sheet, which strictly we should call the statement of financial position. That's the current name for what a lot of us used to know as the balance sheet, and you might at work still use the term balance sheet. And a cash flow forecast or statement. So what order should we do our budgets in? Because it's clearly not very sensible to produce a budget. Let's say your sales team does the budget first, and they produce a budget which says they think they can sell 100,000 units of the product in a year. If every other budget is worked off that, then that might be fine. But what happens if the production team is only capable of producing 10,000 units in the year? There isn't much point in having a sales budget for 100,000 units when your production department can only produce 10,000. So that brings us round to the concept and the idea of the principal budget factor. Principal budget factor is really just another name for limiting factor. Okay, and what we have to do is identify what is it, what resource is it or factor that's going to be the one that is most constraining the organisation, because we need to work the budget out for that thing first, because then everything else needs to be worked off that. So if it is limited by our production capacity, then we should do the production budget first, so we then know how much we might be able to sell and how much material we might need. So the strict definition here I've said is the principal budget factor is a factor which limits what an organisation can achieve. Invariably this will be sales. So for your exam, nearly always the number of items that customers want to buy is likely to be the constraining factor. You're always likely to be able to get enough material or enough labour if needed. It's just that there might not be sufficient demand for your products to need to recruit any more staff or buy any more materials. So you'll normally see the sales budget being calculated first in this exam, but do just watch out in exam questions for the examiner telling you what the principal budget factor is. Okay, so let's have a little think about how everything is driven once we've got the principal budget factor. There's the formal definition at the top of the page there, but as I said, it's pretty much what we've just talked through, so I'm not going to dwell on that. You can have a look in your own time. So let's imagine we've done the sales budget first because we're limited by the amount of sales that our sales force can make. Once we've done the sales budget, we can work out, well, how many items do we need to produce? Now you might think that those two are going to be one and the same thing, but you might need to make adjustments to get from the sales budget to the production budget for any change in inventory levels. Okay, so if, for example, you were going to sell 100,000 units in a period, that was your sales budget, and you already had 100,000 units of that product in stock, and you didn't want to have any left in stock at the end of the period, then you actually wouldn't need to produce any during the year, okay, because you just use up all of your stock in making your sales. Once you've done your production budget, so you know how many items you're going to produce, from that then all of the other kind of manufacturing type budgets will arise. Once we know what our production budget is, we can work out what our raw materials budget needs to be, what our labour budget is, and what our overheads are going to be. We put all of those things together then to give us our cost of sales budget. Once we've done that, that can flow into our income statement, but obviously the cost of sales budget will generally be just to do with the sort of production stroke manufacturing costs, so we will then need to add in selling and distribution costs and general costs and any admin costs, so that will be built into our income statement. We can then do our cash budget as long as we know what our capital spending is going to be, also what new assets we're going to need to buy, and our balance sheet or statement of financial position. Okay, now it's highly unlikely you'll need to do any of steps 4, 5, 6 and 7 in the exam, but you need to be aware what goes into a master budget. You're most likely to be spending your time on the first 3 areas, so the most common stuff to have to do in the exam is going to be sales budgets, production budgets, materials, labour and overhead budgets. So let's, without further ado, take a look at an example. This is quite a comprehensive example, but it will go through all of the things you then need to be able to do on your budget process. So we've got a question here called Goody Co. So we're told here that Goody Co manufactures 3 products and the following sales are anticipated next period. So we've got information on how many units are being expected to be sold, what the selling price per unit is. We're then told what opening inventory is going to be for X1, X2, X3. And it says in an effort to reduce inventory holding costs, a reduction in inventory is expected such that closing inventories at the end of the period will be as follows. So we've got slightly fewer items we're expecting or we need to have in closing inventory compared to opening inventory. We then got some information about material requirements for each of these products. So each product uses 3 different types of material, and here we're told the quantities in terms of kilograms of each one that's needed. And sneaky bit of information here, it says it is expected that 100 kilograms of plastic will be wasted in the manufacture of X2. Okay. The opening inventory of raw material is expected to be as follows. So we've got raw material inventory as well as finished goods inventory, and again we're expecting to have a reduction in inventory of raw materials as we go through the period. We're told what the prices of the materials are, $2, $4 and $2.5 a kilogram respectively for plastic, metal and rubber. And then it says 2 types of labour are used in producing the 3 products. Standard hours per unit are shown below together with information on wage costs. So we've got some skilled labour, 2 hours in product X1, 2 hours in X2, 4 hours in X3, and some semi-skilled labour, 5, 3 and 1 hours respectively. We pay the skilled labour $14 an hour and the semi-skilled one $8 an hour. Now this is clearly more than would be needed in one question, but quite often they get you to work through 2 or 3 of these short budgets to get an answer in an exam question, so you do need to understand the sort of flow through here. The requirement here simply says prepare the functional budgets for Good Eco, assuming that sales is the principal budget factor. So we have to do the sales budget first. Okay, so one of the other reasons this example is a bit longer is that there's 3 separate products in here. We've got X1, X2 and X3. So we just schedule those out, X1, X2, X3. From a sales point of view, the sales budget is very, very simple. You just take the number of units you're expecting to sell and you multiply by the selling price per unit. Okay. So if we take those figures into our working for our sales budget, units for X1 was 7,000, X2 5,500, X3 4,000, selling price a unit of 150, 100 and 110 gives us what we're really after, which is our revenue. Okay, so 7,000 times by 1050, if we do this in thousands just to save all the zeros, 7,000 times 150 is 1.05 million, so 1050 in thousands. Then 550,000 for X2, and for X3 440,000. In some of these budgets it's then worth having a total, so we add up the revenue figures to get our total revenue budget for the period. 1050 plus 550 is 1.6 million, and then 440 2.04 million. So 2040. So it shouldn't ever really be a big problem to do the sales budget. It's just literally a case of number of units you're expecting to sell times by the selling price per unit. Once we've done that, we can do our production budget. And this is probably the key one really to your understanding and your ability to kind of work through these exam questions efficiently. Again, we're going to concentrate on the 3 products, X1, X2 and X3. Now if we go back to the previous page where the question is, we know for example, product X1, we're expecting to sell 7,000 of those, right? But we've already got 4,000 in inventory. Okay, so if we were happy to be left with no inventory at the end of the period, we would only need to make 3,000 units of that product in the year, because we're trying to sell 7,000, we've already got 4,000, we just need to make 3,000 more. But we also need to end up with some closing inventory of 2,200 units. So rather than just making 3,000 units to get us from 4 up to 7, we're going to need to make 5,200 units, because we need to be left with 2,200 units. So the way we work this through is to take our sales units as our starting point. So for product X1, that's 7,000. We add to that our closing inventory, which here was the 2,200. That gets us 9,200. So we somehow need to get our hands on 9,200 units. 7,000 to sell our customers and 2,200 to have left in inventory at the end of the period. But we've already got some in opening inventory. We've already got 4,000 in opening inventory. That means we only need to produce 5,200 units. Okay, so that's the important bit. It's sales units, add on closing inventory, deduct opening inventory to get your production. Doing the same thing for product X2, you can maybe have the figures from the question in front of you, but we're planning to sell 5,500 units of X2. We wanted to have 1,800 left in closing inventory. That's a total of 7,300. We've already got 3,000 in opening inventory. So that's 4,300 we need to produce. And finally, product X3, we're planning to sell 4,000 of those. We want to have 1,000 left in inventory. That's 5,000 we need to get our hands on. We've already got 2,000 in opening inventory. That means we need to make 3,000. Okay. Now the only thing in an exam question that could be thrown at us to just give us a little twist on this, and it's not in this example, but I'll just do a little bit on the side for a second, is, what if 10% of X3 production is not good quality? Okay. There, we would have to take the 3,000 units we think we're going to need to make and say, well, if we only made 3,000 units, we'd lose 10% of that as not being of the right quality, and we'd only be left with 2,700 good units produced. So we would need to gross that up. And the way we do that is we take the 3,000 units and we times it by 100 over 90, which would give us 3,333 units, give or take a bit of rounding. If you lost 10% of that, 10% of 3,333 is 333, and you'd be left with 3,000 good units. Okay, so just watch out for that. That's not an uncommon little exam twist to play around with. Okay, back to the example at hand though. We've done the production budget. Now we've done the production budget, we're in a position to start looking at things like the materials budget. Okay, and our starting point for the materials budget, if we look at this, we got in this question, we've got three different types of material. We've got plastic, metal, and rubber. Okay, so plastic, metal, and rubber. Layout doesn't particularly matter here, but you'll generally find it easier to have the materials across the top here. So plastic, metal, and rubber. And take the three products you're making, product X1, product X2, and product X3. We now know how many units we're going to be producing. We're going to be producing 5,200 X1s, 4,300 X2s, and 3,000 X3s. And we're told in the question how much material each one of those uses. So an X1 uses 3 kilograms of plastic, 5 kilograms of metal, 6 kilograms of rubber. Okay, so we need to multiply the number of units produced by those quantities, 3, 5 and 6. So 5,200 times by 3, 5 and then 6 kilograms across the columns, which gives us 15,600 kilograms of plastic, being 5,200 times 3. 5,200 times 5 is 26,000 kilograms of metal, and then 31,200 kilograms of rubber. Same sort of idea for product X2. Again, looking at the information in the question, each unit of X2 uses 4 kilograms of plastic, 1 kilogram of metal and 3 kilograms of rubber. So we're going to get 17,200 kilograms of plastic. We've got 4,300 of metal and 12,900 of rubber. And then finally X3, 2, 4 and 1 kilograms gives us 6,000 kilograms, 12,000 kilograms and 3,000 kilograms. Okay, then we can go through the process of adding those together to see how much of each material we need. So we total those up, that comes to 38,800. Then we've got 42,300 and 47,100. What we also have to remember here, though, is that we did get some information about some wastage in the question. So we were told it's expected that 100 kilograms of plastic will be wasted in the manufacturing process, in manufacturing X2. Now it doesn't really matter which product it's wasted in. The fact is that we're going to need to use 100 kilograms more plastic than we have just calculated. So if we now just go and add that in down the bottom here, just call it wastage. That's plastic, 100 kilograms. Total that lot up, and that lot will give us our material usage. Okay, so it's 38,900 kilograms of plastic we need to use, 42,300 kilograms of metal and 47,100 kilograms of rubber. So that's how we do what we call the material usage budget. But that's not where the budgets to do with materials finish, because we need to also know how much material do we need to go out and buy. Because in the question we're told about opening and closing inventory of raw material. So we know we start the period with 6,800 kilograms of plastic, and we only want to end it with 3,000 kilograms of plastic. So we do a similar sort of working to what we did with the finished goods opening and closing inventory. If you remember that from a few minutes ago, we added on the closing inventory and we deducted the opening inventory. We've got to do exactly the same thing here now. So if we add opening inventory, which for plastic was a 6,800 kilograms, for metal 4,200, and for rubber 8,000, and then we deduct closing inventory, 3,000 kilograms for plastic, 1,500 kilograms for metal, and 3,000 kilograms for rubber. That will then give us our material purchases budget. That at the moment was measured in kilograms. So material purchases for plastic is 38.9 plus 6.8 minus 3, so 440. I hope you can see that I've made a bit of a mistake there. That should have been add on closing inventory and deduct opening inventory. Apologies about that. So let's just stop there and cut that. That's not quite then where the budgets for materials finish, because we also need to know how much material we're going to need to purchase. In the question we were told about opening and closing inventory of raw material, so we have to go through doing a similar sort of adjustment to what we did with the production budget. Okay, with the production budget, remember, we added on closing inventory and deducted opening inventory, so we've got to go and do the same thing for the materials for the same reasons. Okay, so material usage is 38,900 for plastic. We add on the closing inventory for the three different materials, which are 3,000 kilograms, 1,500 kilograms, and 3,000 kilograms. Deduct opening inventory, which was 6,800, 4,200, and 8,000. That will give us our purchases budget. In kilograms, that's going to be 35,100, 39,600, and 42,100. So that's the purchases budget by volume. And if you have enough information in the question, you may well then go and work out the material budget in monetary terms as well. Okay, so if we look at that, because we have got the information in this question, so purchases in dollars, we know that according to the question, plastic is expected to be $2 a kilogram, metal $4 a kilogram, and rubber $2.50 a kilogram. Okay, so if we build those into our calculations, and it's at $2, $4, and $2.50, we get a purchases budget of $70,200 for plastic. For metal, it's at $4, so 39,600 kilograms at $4, that's 158,000 $400, and then 42,100 kilograms at 250 gives us $105,250 worth of rubber. Add all those three together, we've got a total purchases budget of $333,850. So you can see there is quite a lot of potential for flow through here from the production budget through to the materials budgets. So what exam questions will sometimes do is they'll take you through all of that sort of step process. They might give you information about sales units and then expect you to get down to materials purchases, and there's no real shortcut other than to have to go through the steps we've done there. Okay, in an exam question you might only have to do it with one product or one material, but still you've got to go through a number of different steps there. So once we've done the production budget and then the materials budgets, we could now finish off and look at the labour budget, because in the question you're told about how many hours per unit each one of these products takes in terms of skilled and semi-skilled labour hours. So over the page, let's go and just do the final budget here, the labour one. Okay, now we've got two types of labour. We've got skilled and semi-skilled. And we've got three products, X1, X2 and X3. Now we know X1, we're going to be producing 5,200 units. And in terms of skilled labour time, that's going to take 2 hours from the question, and for semi-skilled that's 5 hours. So in terms of skilled time, that's going to be 10,400 hours, and semi-skilled 26,000. Product X2, we're making 4,300 of those, and each one takes 2 hours in terms of skill time and 3 hours of semi-skilled, so that's going to be 8,600 and 12,900. Nearly there. Last one, product X3, we're making 3,000 of those according to our production budget, and each one uses 4 hours of skilled time and 1 hour of semi-skilled, so it's going to be 12,000 and 3,000 hours. Total those up. Skilled time then, we're going to have a total of 31,000 hours, and for semi-skilled 41,900. We are told in this question how much each type of labour is paid, so $14 and $8 an hour respectively. So $14, $8 should give us our labour budget in total. So that's our labour hours budget, and here's our labour budget in monetary terms. $31,000 times 14, that's 434,000. And semi-skilled, 41,900 hours at 8 an hour, 335,200. And if we wanted to work out the total, obviously it's just those two added together, which comes to $769,200. Okay, so you can see there's quite a lot of work involved. You will expect to get two or three of these sort of budget preparation questions in your computer-based exam, because they do, you know, really test quite well your understanding of the way all the budgets fit together. But I would say to you, probably the most important one to get comfortable with is the production budget, because everything else kind of flows off that. Do be prepared for these exam questions on this topic to take a little bit of time, so don't be surprised if you take 5 minutes to do one of these, which is why they're probably best left towards the end of the exam when you're not feeling under quite so much pressure. Alright, okay, that finishes this session on production budgets. In the next session we're going to carry on with budgets, but we're going to look at cash budgets and a few bits and pieces around cash budgets.